to the Finance and Audit Committee. The regular meeting agenda, Thursday, January 25th. Like to call the meeting to order. Is there a public opportunity to, well, no, there's no opportunity for input from anybody else, right?
There is, but I don't
Okay,
believe we have.
public opportunity to discuss matters of public interest within committee scope, including items on or not on the agenda. We consent items. We got the consent agenda.
I did.
Yeah, we're gonna start off with the consent agenda. Recommendation to approve the action summary of the,
I'll make that motion.
I'll second.
All right, Director Clark.
Aye.
Director Weber.
Aye.
Motion passes.
All right, next we move on to the action item, and that's election of officers. Recommendation is to elect a chair and vice chair to the Finance Committee.
So we need a motion and a second for someone to be chair, and then we need a motion and a second for someone to be vice chair.
I'll make the motion for Director Jones to be chair.
Second.
Okay. Director Weber
Aye.
and Director Clark. Great. And that was for Gay Jones to be president.
Yes.
And then we need a vice chair.
I'll make a recommendation, yes, yeah, exactly, for Director Weber to be vice chair.
Weber to be vice chair. Okay. And we have Clark and Weber.
Yeah.
Okay.
Aye for myself.
Yes. I know. Aye. Okay.
Okay, with that, next we move on to the we did the election of
Yep.
officers. We're gonna move on to presentation items, our bi-monthly fiscal report through October 31st, 2023, and CFO Dave O'Toole will do the presentation.
And members of the public. Tonight, I'll be presenting the bi-monthly fiscal report that takes us through October 31, 2023. So the first 4 months of the fiscal year. Because of the way the calendar works, we don't have a board meeting in December. So this item gets pushed over until January, which means we'll have another bi-monthly fiscal report in February, which will take us through December. Then we'll be all caught up at that point. So this is, if you're wondering why there's the lag, that's why we're only going through October for this month. And the purpose of these reports is to help you monitor the fiscal health of the district and identify any deviations from the budget plan. So with that, I'll take us right in. So this first slide is the general fund cash balance trends through October 31 again. This chart shows the updated general fund cash trends. The red line is the fiscal year 23-24. The green line is last year, fiscal year 22-23. The trajectory after 4 months follows a historical pattern. You can see how it dips down. The general fund cash dips down through December or January, and then it comes back up as those property tax receipts come in. The first tranche in January, and then again in April, it bumps up again. So what's notable here, other than the historical pattern, is that there's a difference of about 26 million, almost 26 million there. That where our cash is better off than we were last year at this time. And the reason for that is at this early point in the year, 4 months, and it's largely a matter of spending delays that didn't happen is the same timing as last year. It doesn't necessarily indicate a windfall. We'll get a better look at it next month. So this next slide is your total general fund revenues. And let's see, what's notable here is there's 3 lines here. So the green line is prior year. The blue line is budget and the red line is actual. So through those first 4 months, you can see that red line's squarely nudged in between the budget year line and the prior year line. In terms of the numbers themselves, just read them out for you. So in August, at the end of October, revenues were 20.2 million, which is about 4 million more than the green lines. We're about 4 million more in revenues than the prior year, but we're about 3.3 million under the budgeted actuals. So the blue line is just above about 3.3 million under what we actually received after 4 months. And a comment about that, it is 4 months. You can see it's still pretty low for a budget that's going to get up to nearly 300 million. It's still it's still a little early to make conclusions, but it's something that we'll watch closely. What I can talk about, a couple specific elements on the next 3 slides, but first is the EMS revenues or medic revenues. You can tell there is a pretty steady rate of growth for medic revenues over the course of the year. And the blue line is the budget year, the green line is last year, and the red line, which you can see, is a little bit above the blue line. So we're actually about, let's see, about $1 million over more over the budget line. So 4 months in, we're already $1 million over on EMS or medic revenues, and it's actually about $2 million more than last year. So we're trending a little ahead on medic revenues. These next 2 slides are PPG EMT, which is not, strictly speaking, is not a general fund revenue. It goes into the IGT fund and gets transferred to the general fund. So for practical purposes, it's a general fund revenue. So I wanted to spend the next 2 slides talking about it. And I know it's an issue that we've talked about with the board before. It's a significant new revenue source, and we want to keep a close eye on it. So this slide here is the PPGMT, Public Provider Ground Emergency Medical Transport Program, that started in January of 2023. And of course, that's there were 6 months of last fiscal year that it was included in, January to June, which are shown there. And the monthly target, the far left of the slide there, is how much we thought we would get on average every month for that fiscal year. And as you can see, every month it's been under that amount. And this is what you're seeing here is that factor we've talked about before, where the health plans that are participating have been slow to get on board, and they're starting to catch up, but they're tending to pay the older claims first, because there is a penalty for the 15% per year penalty on late payments. So they're working more backwards to pay the older ones first, generally speaking. In the next slide, you'll be able to see what's happening in this fiscal year, but I just wanted to point that out. So every month, those red lines are creeping up as they're paying more of the older ones. But we'll have a better report in the mid-year over whether we think they're actually going to reach the 1.658 for 22-23. So now we're moving to this fiscal year and covering the same period through October 31. You can see that the lowest number on the right, the 600,000, that's lowest because, again, they're more focused on let's catch up on those old ones first. But again, with every month, every time I report this to you, those red lines are going to keep going up, at least for the next year or so. But that's practically for the next foreseeable future. We'll see those numbers go up. Big question is, will it hit in 23-24? Will it hit an average of 2.169, which is the 12-year average, essentially the 12 months average every month that we expect. So, let me,
At what point do you anticipate we will be caught up in arrears, and that from that point on, we'll be actually collecting what we're supposed to be?
good question. The only thing I have to go on that was GEMT, where a little before my time, but as I looked into it, I was told it took about 18 months to get caught up. So maybe June 30th, we're looking at full. I mean, that's the best I guess I can give you right now. It isn't as if the health plans didn't know this was coming. There were meetings going on, people in this organization and in the state who were meeting with the health plans as early as October 2022, saying this is coming. You got to update your systems. You got to change your rates, and whatever reason, all of them as a group have not gotten totally caught up.
And at that point, we should be caught up and be starting fresh month to month as we're collecting as we should be.
Yeah, it based on history, I would expect that, by the end of June, we would have it, they would have it nailed down where they'd be paying and sort of an EMS type, where it's a fairly predictable revenue stream and so forth. This is another area we'll be coming back in the mid-year with a more refined estimate, like of how are we going to hit these, in this case, the 2.169 million or not, based on kind of what we're seeing.
Thank you.
But is it like, it's like a trend then? I mean, they're gonna, looks like they're gonna continue doing this because you're gonna get the money, but is that like just a pattern that they do deliberately, or?
Well, they eventually caught up on GEMT. From what I've told, it was system adaptation, adjusting their payments and so forth, and that they're getting there. I don't see it as a long-term trend.
Okay,
Yeah.
okay, thank you.
Yeah, and they do pay the 15% annual interest. So
Yeah.
those accountants and those, healthcare companies probably don't want to avoid that too.
That's
So.
true. Yeah.
So turning from revenues to expenditures, the blue line again is the budget line for expenditures, where we think by the end of the year expenditures, you can see the far right top is 294, almost 294.5 million. The actuals through October were 96.9 million. And so again, substantially under what we budgeted in terms of expenditures. The difference there is 17.4 million. So we're 17.4 million where we thought we'd be in October. Again, it's too early for me to say that there's a big windfall of savings here. I think it's more of a timing difference. But that is the number as of October 31st. Moving on to labor costs. The blue here, we have the red line. The current year number is pretty close to the blue line. And actually the red is about $700,000 more than budgeted at the end of October. So when a general fund labor cost of 240 million, 700,000 at the end of 4 months is not a big deviation in my mind. But again, we'll have a better estimate for the rest of the year when we come back next month with a mid-year report. And then reserve balances. So this slide shows where we are with reserves. You notice the two spikes there that follows the revenue trends, where we get in substantial property tax revenues that bump up our reserves as well. Right now, again, we're doing a little better than we were last year. So there's a difference there of about $4.5 million. And our negative balance is negative 38.1 almost, and we are in what we call the dry period. So we're currently borrowing from the county for cash purposes, and we will do that probably through this slide would suggest that we're going to do it through December, maybe, and maybe change and then the surge in January. And again, that will be reported next month. That is what happens. So. The purple line is the 15% reserve. So that it's about 42 million based on the final budget, the numbers that we established. So the reserve would be, 42 million. That's a reference point. And then next, turning to the CERT fund. So as of October 31, 2023, just look all the way to the right of the slide there, the green there, you can see it's a dip down. What happened there is when I reported the CERT balances as of the end of October, excuse me, at the end of August, it was about 75 million. So that dip there is about 5 million down to the number there at the top. There's 70.7 million. And I want to assure you that because we do have the benefit of knowing what happened after that point, the revenues did climb substantially, about 10 million. So when I report back next month, we're going to be close to 80 million. So that green will bump back up. And it was a bizarre kind of significant spike or drop and then spike that you noticed. But Ron and I, our controller, looked at this, and you can actually follow it on the sort of the market total, the Dow Jones or whatever, that there was a dip at that point, and then it came back up, and it was significant. So PERS invests this money, and they're pretty closely tied. This fund is pretty closely tied to the market. So it reflected that. So that long way of saying that dip will be rectified, if you will, when we report it next month.
And the way the economy is going, it might be just.
Yeah, just keep going up.
I
So,
don't know, keep it rolling.
yep. So that's the CERT fund. So now your takeaways through October 31, actual general fund cash trended well above the prior year, again, 25.8 million higher. Overall general fund revenues was off to a slow start, $3.3 million less than what we had in the final budget. And I think that shortfall is largely attributed to the PPGEMT income not coming in as rapidly as and as evenly as was built into the final budget. Let's see, monthly PPGMT revenues are increasing though. We're still short of the 3 million, but 3 million short of the 22-23 in 22-23 and 4.6 million short after 4 months of 23-24. Again, it's that lag of payments. And then finally, general fund expenditures were again 17.4 million, lower than final budget. Too early to say that it's a windfall. It's more probably a timing issue. So. And that concludes my presentation, and I welcome any questions you may have.
I have one. On the overall general fund revenues, off to a slow start.
Mhm.
Maybe I have this backwards, maybe I don't, but 3.3 million less. It's still better than last year. Is that correct? Where we were last year? That's what I was
Let me just
following.
double check the slide there. Yes.
Okay,
Yeah.
thank you.
Beautiful. Good report.
Thank you.
All right, next we move on to, hearing no questions, that's it, Bob. We move on to the, fraud risk assessment report. And that would be Controller Ron Emperdrive.
And while Ron is coming up here, I just want to say a couple things about this report. And as a refresher, if you will, in October of last year, excuse me, not October, in February of last year, I presented to this committee some report on our internal controls practices. So I talked about we have external auditors, we do some internal auditing, we do training. There was several factors I mentioned. And then I also mentioned that we were looking forward to doing a fraud risk assessment. So Ron is here to report back on that fraud risk assessment that we said we were going to do. Before he begins, I just want a little more context is that Ron is a certified fraud examiner, which is kind of hard to come by in the public sector. And we're lucky to have him on staff. And he was able to use those skills to do the exam for us. And he used as a basis a material from the Association of Certified Fraud Examiners. I had more than 900 criteria to consider across the activities that financial activities and practices that affect finances across the operation here. And you'll see, and you have in your report, how many of those sort of 900 criteria actually ended up on where we had an issue that we needed to address. So with that, I will turn it over to Ron to present the fraud risk assessment.
I must say, we're extremely grateful and fortunate to have such a star controller on our side.
You're welcome, Director. Good evening, Directors. Chiefs, my name is Ron Empedrad. I'm the District's Controller. And tonight I'll be presenting the results of the fraud risk assessment. As you may have noticed, it's a preliminary report. And the reason that it's a preliminary report is that it's just the first step of a series of steps that we are going to undertake. And it might last a year, even over a year for us to complete. So let's dig in. So what is a fraud risk assessment? It's essentially a structured process for us to be able to identify vulnerabilities of the district to fraud, internal or external. And why do we even conduct a fraud risk assessment? The risk of fraud is present in every district, in every organization, even Metro Fire. By doing this fraud risk assessment, we proactively address that. We proactively identify the vulnerabilities of Metro Fire. We identify the fraud, and we develop plans to address those risks of fraud. So what are the benefits of conducting one? Well, for one, obviously, we prevent and deter fraud, and then we also prevent financial losses. In some respects, even a bigger benefit would be to prevent damage to our reputation. If an instance of fraud is reported in the media regarding Metro Fire, for example, that would significantly reduce our chances to get grants from the states, from other grantors. So we have lots of grant activity. So that would be significantly affected if we do not address the fraud of risks in our organization. Another one is that it provides evidence that we are adhering to a culture of integrity, and not just for our employees, but also for our vendors, our partners, and to the public. We're essentially telling them that we are serious in our role as stewards of public funds. So how did we perform the assessment? As Dave has mentioned, I utilized questionnaires from the Association of Certified Fraud Examiners. I interviewed key personnel, so mainly division managers. I looked at our processes, our procedures, and based on the information that I gathered, I identified the fraud risks. I looked at, do we have controls to address those fraud risks? And if we don't, then what kind of recommended action plans that we can undertake to address those risks? So are there limitations to fraud risk assessments? Yes, there is always a limitation. One big limitation is that it does not guarantee that we identify all fraud. It's a good step towards that, but we cannot provide a guarantee that all fraud in the district will be addressed. But again, it goes a long way. Another one is cost benefit. Even if we identify a fraud risk and we have recommended action plans, the cost of implementing those plans might exceed the benefits that we'll get. So in those cases, we do not even make the implementation because again, costs exceed benefits. We always want to make sure that the benefits will always exceed the costs, and that is one of the key considerations that we took into consideration in identifying what kind of action plans do we undertake. So what are the results? So in the process of doing the risk assessment, I looked at 12 risk areas, and of those 12 risk areas, I had identified fraud risks in 9 of them. And in these 9 areas, I presented 22 recommendations, and I'm going to discuss each one of them. And I'll discuss each one of them based on area. So the first one is the management and key employee assessment. Essentially, this looks into the control environment. A better way to say it is the tone at the top, because whatever the tone at the top is, it kind of trickles down to every aspect, to every employee in the organization. First one is to update the code of conduct. While the district has a code of conduct, the last time that it was looked at was back in 2001. So it's been over 20 years now, and some of the provisions are not applicable anymore. So it's due for an update. And this action plan is assigned to HR, and they're in the process of doing this, and it should be or expected to be completed by December of 2024. The next one is to adopt an anti-fraud policy. So by adopting this policy, essentially, it's an endorsement by senior management, by top management, that we take seriously our role as custodians of public funds. And again, it goes into the tone at the top. This is assigned to finance, and it's in process and should be completed by June 2024. Next one is to post the code of conduct, the anti-fraud, and the conflict of interest policies to our website. Currently, we have the conflict of interest policy in our website, but we're still awaiting the update of the code of conduct and the adoption of an anti-fraud policy. Once all of those are completed, then we will post them at our district website. And that should be expected to be completed by December 2024. This next group is all about employee assessment, all about fraud, detecting fraud in the employee level. First recommendation is for every employee to certify compliance with our code of conduct. Once we update it, so the plan is for every employee once every 2 years to sign a certification that essentially states that they've read the code of conduct and that they will adhere to it. This recommendation is assigned to HR and still in process and expected to be completed by December of 2024. The next one is to provide a copy of the organizational chart to every new hire. By providing an organizational chart, we essentially ensure that the lines of responsibility of reporting are known to the employee. And this is assigned to HR, and they have implemented it at the time of this report. Next one is to provide a copy of the updated job description for every new hire. Again, this is signed to HR, and they have already implemented this. And the last one for this group is to provide or to create a consolidated accounting manual. And this is assigned to finance. We're still in the process of completing this. We have lots of narratives, descriptions, but it's just pieces, and we're almost there, but we just need to make sure that it's all reviewed and all written out and done in a consolidated manner, and that's accessible to all finance staff. We are in the process of doing this, and it's expected to be completed by June 2024. The next group is payroll fraud schemes. So first one is to ensure that the paycheck distribution is done by non-payroll staff. So currently, we have about 30 or so employees who still get their checks or their paychecks via check rather than via ACH. With checks, there's always a risk of fraud. It's not really that secure. And by ensuring that the distribution of these paychecks is done by someone outside of payroll, we can discover if there's any existence of ghost employees. And so this is one good way of doing that. Again, this is assigned to finance, and it has already been implemented. Next one is the mandatory vacation for payroll staff. By doing mandatory vacation, it's a fairly simple process, fairly simple step, but you can discover a lot by doing mandatory vacations. The employee filling in or replacing the one going on vacation might be able to discover unusual items or unusual things going on in payroll, and they might, by doing the mandatory vacation, we ensure that we are able to detect this. Again, this is assigned to finance, and it's already implemented. Next one is for finance to do a feasibility study of whether we can replace our paychecks into pay cards instead. So instead of issuing manual payroll checks, we provide employees with a debit card that every month it gets loaded with their pay, and they can just withdraw it from any bank or do it online even. Still in process and expected to be completed by December 2024. And finally, managerial review of monthly payroll registers. Just to point out, the manager involved here should be someone outside of payroll. And currently, this one is assigned to me and still in process, and hopefully I'll be able to complete it by February 2024, by next month. The next group is scheming and cash larceny, mainly stealing of cash and checks. The only recommendation we have here is that we create a check log at CRRD. By doing a check log, we ensure that all checks that the district receives are properly accounted for and that they're properly deposited in our bank account and none gets lost. This is assigned to CRRD, and as of the date of this report, it has been implemented. Next thing is the purchasing and billing schemes. First recommendation is to provide a bulletin to divisions to communicate that every vendor return must be sent to finance. So by this communication, we ensure that someone other than the divisions, or for example, if fleet division returns something that they bought, by informing finance that they returned a product that they purchased, finance can in turn will be able to monitor whether or not we get vendor credits. So this step will ensure that the district will get proper credit for all vendor returns. It has been assigned to finance, and by today it should be implemented. Next one is preventing cashing of checks at banks. So this envisions a situation when when a check payable to the district is mailed to the district, and before we even get it, it gets intercepted, and then the person intercepting the check goes to a bank and tries to cash it. One way to prevent this from happening is when we inform the banks that we deal with never to cash checks from the district. So if the pay is the district, we do not cash it. What we do is by by saying we do not cash it, that is when someone goes to the bank and physically cashes the check, that's the time we tell the bank employees not to cash it. The way we cash our checks is we just deposit it online, and the banks will receive it that way. So this has been already implemented. I've already communicated with Wells Fargo to prevent cashing of checks at local banks. And finally, trend analysis of vendor purchase levels. What this does is that we're able to identify unusual activity in vendors, and it might be a red flag that requires further investigation. Again, this is a way to detect fraud before it even happens or as it's happening. Assigned to finance and still in process, hopefully to be completed by June 2024. Next one is the expense reimbursement schemes. Only recommendation here is to adopt a food policy and provide training. We've already adopted the food policy, and the only thing left is to provide training. We're scheduling the training sometime in February. That way, all employees, if they have questions, we can answer them and we can guide them and train them on current procedures. Again, it's partially implemented, hopefully to be completed by next month. Conflicts of interest. So one of the recommendations is to compare employee addresses versus vendor addresses. By doing this, if we find an employee whose address is the same as one of our vendors, then that merits further investigation. It could mean that there's a conflict of interest there. Assigned to finance, in process, hopefully to be completed by April of 2024. Next step is to provide an audit stipulation in all vendor contracts, particularly the significant vendor contracts. What an audit stipulation does is it allows the district to audit the vendor books in cases where we suspect some kind of vendor fraud happening, and it's more of a deterrent for the vendors. So this stipulation hopefully can be integrated in all our contracts. And still, we're trying to figure out the correct wording of the stipulation. Still in process, assigned to finance, and should be completed by March 2024. Corruption. So sample of corruption, a good example is bribery. So we're proposing that the inclusion of anti-corruption and anti-fraud provisions in all our RFPs. The particular wording is still going to be discussed with our legal counsel, but still in process, assigned to finance, and should be completed by March 2024. Finally, the last group is theft of proprietary or sensitive information. First one is the password sharing prohibition. We already have a policy for doing this, but our recommendation is to further strengthen it by providing bulletins to all our employees regarding the negative effects of sharing passwords. We're also implementing, or IT is also implementing multi-factor authentication for all our credit cards. They're still working with Wells Fargo to do this, but currently still in process and should be completed by December 2024. Next is the auto log off for unattended workstations. Unattended workstations provide an opportunity for unauthorized access. This is assigned to IT, and it has already been implemented. And what they've done is if you step off from your workstation for 15 minutes, it will automatically lock. That way, no one can access it, even if you're away from your desk. And the last one is the funding of a disaster recovery plan. So currently, when I spoke with the IT division manager, he said that there's a plan to do a disaster recovery site. However, we don't have funding for it. They don't have funding for it. They're trying to request for funding for it, but currently we don't have one. Our disaster recovery site has not yet been set up. If if we get funding for it, then it should be within a year of funding, it should be completed. And that's the last of my recommendations. Next steps. The next steps is to monitor implementation of the action plans, to do biannual status reports to the finance committee, and then to coordinate with our external auditors for future audits. And that ends my report. If you have any questions and comments, I'm happy to answer.
Yeah, I think this is excellent. I could see where, and I'm wondering how many other institutions like, you know, like ours are doing this kind of a program.
It's so number one, one of the hurdles of doing a fraud risk assessment is the cost.
Yeah,
If you do it with an external party, and usually what happens is you would hire an external auditor or an external CPA firm to do it. That's one way of doing it, but that would be a costly way of doing it. And not a lot does the fraud risk assessment. It's not on the top of every organization's priorities. Yeah, I cannot tell you right now how many have done it.
Yeah.
But I've not seen so far. I've tried to Google it, how many agencies have fraud risk assessment. You can only find 1, 2, or 3 fraud risk assessment reports, but not a lot.
It seemed like, well, we can do it internally because we have the talent to do it. And also, are you gonna need more staff to deal with this? Is it, because I'm managing a bit of work?
Yeah, so I started doing the fraud risk assessment back in August last year. Took a couple of months to get it done. As far as the need for additional staff, I think we can handle it. Just take note that I'm not independent of the district. I'm an employee of the district. There's always a difference with hiring an external auditor. Their independence is maintained, but in my case, I mean, I'm not truly independent of the district. I'm considered a managerial employee, so. Yeah, but to answer your question, there's no additional staff needed in here.
All right, I can see this leading to transparency, like it's just ridiculous. We've got, you're running a tight ship, you know, and it would be really, it also would prevent employees, anybody that has a notion to maybe want to do a little fraud, they would know that, man, this is a tough system to beat. So,
one of our core values, integrity. So,
absolutely, yeah. Thank you very much. I think it's excellent.
Oh, great work. Thank you for being so proactive with this.
Yeah.
We're very, very, very lucky to have you. Thank you.
Cutting edge, man. We're
And we'll
cutting
be
edge.
putting the report on our website, on the transparency section of our website too.
Yeah. So we'll get another award for transparency, continue our record.
I think we already do have that.
I know. We've been getting those quite a lot. Yes. Thank you very much.
You're welcome.
Thank you,
All right.
Ron. Great job.
All right. With that, no further business in the finance committee. I will declare this meeting adjourned.